All right, Chapter 10. So Chapter 10 on Friday, we learned about our sales journal. And our sales journal is what we use when we're going through and recording the fact that customers are buying on an account. There are 3 columns in our sales journal. I would have normally reviewed this with you yesterday, but I was taking care of some FBLA stuff, which brings me to the point we do have an FBLA meeting today during ELT, and here we're going to be talking about state and officer elections for next year, our end-of-the-year banquet. We have community service, rollerblading, Go Green Project, lots of fun things that we're doing. So today during ELT, and we're actually having it right here in room 413. But our sales journal, there are 3 columns that go in your sales journal, and it's only used when we have customers buying on an account. You will find in going forth, I will always talk about customers or vendors. Customers are going to be people that buy products from us. Vendors are going to be people that we buy from. So, for example, in the Thunder Zone, we're looking at getting ready to sell cookies. Our cookie oven is being delivered today. It kind of looks like a pizza oven. So we had to get the oven from one vendor. We had to buy the frozen cookie dough from another vendor. So vendors are going to be people that we buy from. Customers buy from us. So customers are going to generate sales for us. Because we are turning around and we are selling a product, we also have to go through and collect sales tax. Sales tax is always going to be a percent, 5%, 5.5, 6.2. The directions will always tell you. Yesterday, you dealt with your cash receipts journal. Cash receipts journal is very, very similar to your cash payments journal. You have a general debit and credit. Then you have an accounts receivable column instead of accounts payable. That is going to be the trickiest part, just like in Chapter 9. Instead of writing accounts receivable Ben Spouty, accounts receivable Sarah Rome, I'm going to write just Ben Spouty or Sarah Rome, and I'm going to use that accounts receivable column. You are going to be in the habit of putting it in your general column because that's what we did before, but you have to bump it over to your accounts receivable column. And then you're going to go ahead and then you have a sales tax payable column, and then sales discount column, and cash. I was like going left to right. We have to have our sales tax column on there. It's going to be sales tax payable credit because when we go through and record our cash and credit card sales, at the end of a day and every 2 or 3 days, a business is going to go through and record how much sales it's had. You go to Don's, you buy some ice cream, you pay them with cash. At the end of the day, they're going to generate a big report to find out how much sales they have. All businesses need to do that. So they're going to put in the value of the product, the value of the sales tax, and the total cash received. We have to track that sales tax, though, because if we don't track the sales tax, it's going to be like we got extra money when, in fact, we owe that to the government for the sales tax we collected. So that's a quick rundown of 10.1 and 10.2. So where are we at for 10.3? Sometimes customers don't want to keep what they buy. And that's really what we're looking at in 10.3. So, for example, let's say that you got a pair of pants from your parents for a present. You don't like them, they don't fit right, so you're going to return them. So we go to Kohl's, we stand in line, go to the customer service counter, right? So when you get to the counter, the first thing that you have to do is you have to put up the product, and then you have to give them the sales receipt, right? Cash register receipt. Most of the time they say, well, don't do a return without the receipt because they want to make sure you bought it there and they don't have to deal with theft or loss prevention. So you put it up there and they're going to go through and they're going to check your receipt because there might be other items on the receipt that were purchased at the same time, and they would ring it up in their system. And the account that we're going to use is going to be called sales, returns, and allowances. Sales is a revenue account, has a credit balance. Sales, returns, and allowances is a contra sales account, which means we keep track of things that customers return. That's important for us to know. I had to return a pair of pants to Lands' End, and they always ask me the question why there's like a code, like why did you return it? And my reason for returning it is they didn't fit right. So I would circle that code or write that code number on there so they can keep track of all of the different reasons why customers are returning products. It's important for a business to know this. If it was damaged, not the quite quality, because if people are returning it because of poor quality, then they would go through and make a decision to get different products in. It costs the business a lot of money to have a sale and then process a return. So the less you have of that, the better it is for your business in itself. So we want to make sure we keep track of that information. So I return those jeans. Let's say the jeans were $40. Are they going to give me just $40 back? What else do I need to know? Give you a hint. It's going to be 3 lines, so it's got to be 3 accounts. Sales and cash, that's pretty easy. What else do you have to deal with? Tax. So the minute that you return that product, that business no longer owes that sales tax. So the account that you're going to be affecting is going to be sales tax payable, but you're not going to be crediting it, you're going to be debiting it, because once you return that sales tax to that customer, the business no longer owes it. So the jeans were $40, the sales tax was $5, the total cash received back by the customer would be $45. So we have to go through and list those in the correct order, because Aplia will mark it wrong if you have your 2 accounts in the wrong order. So we're going to have to go through and list our debit first. Okay, so we're going to debit sales, returns, and allowances for the value of our product. Then we're going to go ahead and do our sales tax payable for the amount of our sales tax. And in this case, we're not issuing cash back, because that gets even a little bit trickier. We're just going to say that they returned it on an account. So I would do accounts receivable / RE Plaster. And don't forget, anytime you put a slash mark in the accounts in our general journal, we also have to put a slash mark in our post reference. So that's what we're looking at in our 10-3 is customers that are returning on an account from us. So let's get that journalized. I should not turn on the assignment until I'm ready to talk, because I hear people that are not really listening to me, and then you get really confused, right, Brandon? So the first thing that happens is we're using June of the current date. So let's go ahead and type in June. Date is the 1st. We granted credit to Wilbanks & Associate for merchandise return, $457 plus sales tax of $36.56 from S356 for a total of $493.56. Yep. June 3rd. You're right, not 1st. So when we look at this direction, there are a ton of numbers in here. What we always need to know is it's giving us the original sales invoice. So it's telling us the original sales invoice was $356. That's important for us to know, because if a customer pays within a discount period, they were going to pay back less, and we need to know what the original date was for that invoice. But when I look at our other numbers for our dollar sign numbers, $457 is the value of our product. They gave us our sales tax of $36.56 and our total. So we have to go through and put in there our first account, which is going to be our contra account, which is going to be sales, returns, and allowances. Our document number is going to be CM, standing for Credit Memorandum 41. You will recall in Chapter 9 we dealt with DMs, which is a debit memorandum. Debit memorandums mean that we are debiting our accounts payable. Credit memorandums mean we are crediting our customers. So that's an easy way. Anytime you see a DM, you know you're going to be dealing with purchases, returns, and allowances. Anytime you see a CM, you're going to be dealing with sales, returns, and allowances. So here I'm going to put in the value of our product, and the value of our product is $457. The next thing I have to do is my next debit, which is going to be sales tax payable. And that is going to be debited for $36.56. And my third line is going to be accounts receivable, Wilbanks & Associates. And this is where I'm like, don't forget, I said accounts receivable / Wilbanks & Associates. So I have to put a slash in this post reference, because when I go to post this, I have to post it to the account accounts receivable as well as to the account Wilbanks & Associates. If you forget that slash mark, Aplia will mark that whole line wrong. And this is going to be where I put in the total amount that Wilbanks & Associates returned, which is $493.56. So that is returning a product from a customer that paid sales tax. On the 6th, it's very similar, but we have a school, and schools don't pay sales tax. So we're going to do everything the same, except we're going to take off that sales tax column. So the transaction reads, granted credit to Westfall High School for damaged merchandise, $67, no sales tax. So I'm going to do sales returns and allowances, CM42. And I'm going to put in just the value of the product, which was $67. And then I'm going to go ahead and put in accounts receivable, Westfall High School. So accounts receivable / Westfall High School, I have to put a slash in the post reference and 67 in my credit. Go ahead and try that